Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if this company is cooking the books or just having a bad quarter. Today we're diving into Jin Medical International Limited's latest filing, and let me tell you, some of these numbers might make you raise an eyebrow or maybe even scratch your head. Stick around to see what's really going on behind the scenes. Alright, so this report is from Jin Medical International Limited, and it's a special kind of filing called a 6K. Think of it as a company giving an update to the US Securities and Exchange Commission, which they have to do because they're listed on a US stock exchange. This particular report covers the month of August 2025, and it's telling us about their financial situation for the first 6 months of the year that ended on March 31, 25, and it's telling us about their financial situation for the first 6 months of the year that ended on March 31, 2025. Now, this part is a bit of legal jargon, but basically it means that this report is being added to other important documents that Jin Medical filed earlier this year. Think of it like adding an important new chapter to an ongoing story that investors are already reading. They want to make sure everyone who is invested or thinking about investing has the latest information tied to their previous filings. The main reason they're sending us this report is to share their unaudited financial statements. Unaudited means they haven't been officially checked by external auditors yet, but it gives us a good look at how they're performing. They're giving us the numbers for the 6 months that finished at the end of March this year. This is where the real story usually starts to unfold. Now, before we get to the juicy financial details, they have a standard forward-looking statements section. This is where companies talk about what they hope will happen in the future. They use words like X plans or intends. It's important for investors to know that these are just predictions and not guarantees. They're basically saying, hey, we think this might happen, but a lot could go wrong. And they're very clear about this. They admit that many of these future hopes are based on assumptions that are outside of their control. They even point us back to their annual report to find more details about the specific risks they face. This is a big red flag that they might be facing more challenges than they're letting on in their optimistic future gazing. Here they highlight some of the big picture challenges. They're bracing for trends and competition within the education industry. This means they're not in control of how the market evolves or how tough other companies play. If the education sector shifts, or if competitors bring out better products or go aggressive on pricing, Jin Medical could really feel the pinch. This is them basically saying if all those risks they just mentioned actually happen, if their best guesses are wrong, or if they can't handle these challenges, then their actual results could be much worse than what they've told us to expect. It's a polite way of saying things could go south pretty fast. Another crucial legal bit here, they're not promising to update these forward-looking predictions if things change unless the law forces them to. So if something good or bad happens, they might not tell us about it immediately. This means investors really need to keep their eyes peeled for other filings or news because this report isn't a promise of continuous updates on their future outlook. Finally, we get to the core of it, the financial statements. This is what we're really here for. They're giving us the unaudited financial picture for the 6 months ending March 31, 2025, and they're comparing it to the same period in the previous year, March 31, 2024. This comparison is key to spotting trends and understanding if they're moving forward or backward. Exhibit 99.2 is where they'll explain their financial results and talk about what they see coming next. This is usually called the management's discussion and analysis, or MD&A. It's the company's management giving us their take on the numbers and their future outlook. This is where they try to put a positive spin and explain away any bad news. This is their official name. Jin Medical International Limited. Located in China, they are involved in the medical and healthcare sector. From what I can gather from other filings, they focus on areas like medical aesthetic treatments and devices, and even some telehealth services. So they're in a dynamic and growing market, but one that's also highly competitive and regulated. This is their principal executive office address. They're based in China. This is important for understanding the global context of their operations and any regional economic factors that might be impacting them. They've checked the box for Form 20F. This means they are following the reporting rules for foreign private issuers using US accounting standards. This is pretty standard for non-US companies that want access to US capital markets. This signature block tells us who is officially submitting this report. Here we have Erqi Wang, the Chief Executive Officer, and Zusheng Wang, the Chief Financial Officer. Their signatures mean the company officially stands by the information presented here. As leaders, they are responsible for the company's performance and its reporting. Now let's talk about the numbers. Since this document itself doesn't contain the detailed tables we'd need to analyze specific figures like revenue or profit, we'll have to infer the general financial health based on the purpose of the filing and the accompanying descriptions. However, typically in these kinds of updates, companies are providing interim financial statements which would include things like their balance sheet, income statements, which would include things like their balance sheet, income statement, and cash flow statement. What we'd usually look for here are trends in revenue growth, changes in profitability, how much debt they have, and how much cash they're generating. For Jin Medical, this period ending March 31, 2025 would give us a snapshot of their performance in late 2024 and early 2025. Without the actual numbers, we can only talk about what kind of information is typically presented and why it matters. For example, a significant increase in revenue might signal successful sales strategies or expansion. Conversely, a drop in revenue could point to market challenges or internal operational issues. In the operating and financial review and prospects section, they would typically discuss the why behind the numbers. Why did revenue go up or down? What's impacting their costs? What are their plans for the future? This section is crucial for understanding management's perspective and their strategies for growth or recovery. They might talk about new product launches, market expansion efforts, changes in their customer base, or even regulatory impacts on their business. For a company in the medical field, especially with aesthetic treatments, factors like consumer spending power, healthcare trends, technological advancements in medical devices, and even social media influence on beauty standards can all play a significant role in their financial performance. They'd likely touch upon how these external factors are affecting their business and what they're doing to capitalize on opportunities or mitigate risks. Alright, so let's put on our investor hats and try to make sense of what this filing suggests for Jin Medical International Limited. This report, a Form 6K, confirms they are keeping the SEC and investors updated as they should. The fact that they're including audited financial statements for a 6-month period indicates a typical reporting cycle. The company Jin Medical International operates in what can be a very lucrative but also volatile sector, medical aesthetics and potentially related health services. This means their success is tied to discretionary spending by consumers and businesses, as well as rapid technological changes and strong competition. They've acknowledged their future depends on factors largely outside their control and that risks are significant. While we don't have the specific numbers today from this particular filing snippet, the structure and the forward-looking statements give us clues. They are in a growth-oriented market, but also face challenges from industry trends and competition. Management's discussion is key here, as it will frame how they see their own performance and what they plan to do to navigate the risks and capitalize on opportunities. We need to be watchful for their revenue growth, their ability to manage costs and expenses, and their overall financial stability, especially regarding debt. The lack of specific figures here is a bit of a letdown for a deep dive, but also face challenges from industry trends and competition. Management's discussion is key here, as it will frame how they see their own performance and what they plan to do to navigate the risks and capitalize on opportunities. We need to be watchful for their revenue growth, their ability to manage costs and expenses, and their overall financial stability, especially regarding debt. The lack of specific figures here is a bit of a letdown for a deep position themselves against competitors and how effectively they adapt to market shifts. What's your take on Jin Medical's situation, and what should we be looking for in their next big financial report? Let us know in the comments below. If you found this breakdown helpful, smash that like button and subscribe to Corporate Decoder for more in-depth analyses of company filings. And don't forget to join our Discord community for more discussions and to connect with fellow investors and analysts. The link is right there in the description. Thanks for watching, and we'll see you in the next video.